everybody, and welcome to the Gold Rush. I am Sam Gatlin, an analyst at All Star Charts, and I am joined by my esteemed colleague and co host, Mr. Jason Pers, a man of many, many skills, including basketball. If you all are in, if you're in Ohio, hit Jason's line. I am sure his Twitter DMs are open. He is putting together some basketball games. I think it's every Friday night. So
Friday nights, yeah.
every Friday. So if you are into playing basketball, you should hit Jason up because he is quite the player, and he wears many different hats. You know, he's a basketball player on the weekends. Sometimes he's a portfolio manager. Sometimes he's over here slinging precious metal stocks and commodities and all of that. So today we're going to dig into everything that's happening in commodities because, gosh, we have maybe a record number of charts to go through for today's show. So without further ado, let's just get into it. Mr. Jean Gauthier, if you will, slide number two. Let's start with the commodity nations, Jason. You've been writing a lot of these higher in your fund. You were mentioning Colombia to me before we jumped on the show. But man, the commodity nations just continue to rip. One that has my attention is Peru ripping to new all-time highs, kind of pulling back today, but man, just zooming out on the monthly chart. I mean, not many countries look better than Peru, and they have 60% materials and zero point zero technology, Mr. Pers. What does that tell you about today's market environment?
Oh, we're in the right environment for metals, and really any metal, battery metals. You're seeing like even nickel starting to look interesting. You have zinc, you have nickel, you have lithium. I mean, go down the list. All these things are moving. Copper, obviously needed for just about everything. That's moving. The copper
Totally. I
stock
brought along a chart of 10 futures making new
10 is
multi-year
moving.
highs.
Yeah. So when do the question for some of you guys out there, like when do you guys see us bring up 10 futures charts lately? It's been a while. So like seeing these moves, these are all new things that are happening that are confirming the move from things like just precious metals. And that doesn't mean the precious metals rally is over. I don't think so. But it was just a precious metals rally. Now it's moving into these other areas of the metals markets. 10, we've highlighted aluminum stocks, steel stocks. So as these continue to move, like I think we're just going to cycle through this commodity cycle, one to the next, till we end up at oil at some point.
Totally, Jason. And just on that note, we have this green revolution index. I don't know how green it really is, but I've been told these are the metals required for a green revolution. Things like your Tesla batteries and things like that. So you have all the rare earth metals in there, the REMX ETF. You have lithium, you have copper, you have cobalt, you have nickel, everything we were just talking about there. And it's ripping to new multi-year highs after resolving this textbook bearish to bullish reversal pattern. So when you look at a chart like this, I mean, this is the beginning of a brand new primary uptrend. It looks nothing like something like gold futures that have been screaming higher for a year and a half now. Like, this is where the rotation is happening, Jason. And I think this chart really shows this rotation quite well. I mean, gold miners have ripped to new all-time highs, but copper miners are right there at the 2011 peak. And I think they are due for some catch up. I think they're going to rip to new all-time highs and catch up to the gold miners and the precious metal stocks that have been doing so well.
Yeah, I think so too, Sam. I think it's a matter of time, really. Like that's all it is. It's the same when like people look at the oil trade and they go, "Oh my gosh, it's taking so long." It's like we don't get to speed up the markets. I wish that was the case. I wish I could go, okay, well, gold's moving. I know copper is going to move right now. Here's the day, time, and send everybody the date and time.
Are you telling me
However,
you don't have a crystal ball?
I do not have a crystal ball. However, what I do have is patience. I've learned it from trading for many years. And I was the least patient trader when I began. So I'm not talking down to anybody, but I've learned from trading for many years. Like, you got to give these things time. And you got to do it the way like Sam and I have been highlighting, like we're buying strength, we're buying these here, we're buying this, like we're not buying this just yet. Like understand those are all for a reason because we're really waiting for certain confirmation. We got it in the copper miners. We've had it in the copper miners for a while. We've seen it in the metals and mining space, whether it's steel stocks, aluminum stocks, some of the big metal and mining names. Now we're starting to move into different areas. We're starting to see coal starting to move. Now we're starting to see some of the energy stocks starting to move. So we just got to be picky on what we're picking at the moment and continue through this commodity cycle because I think it's looking beautiful, Sam. I think we're literally running from, gold, to gold miners, to silver miners, to palladium, to platinum, to copper miners, junior copper miners are ripping. International metals and mining names are ripping all the way through lithium, coal, and now we're starting to see energy start to perk up. Yes, oil had a bad day yesterday, but I don't think one day is going to really do it or end this trend just yet. So I'm going to give it some time. Oil itself doesn't look great, but there's some stocks that do. We're not buying oil. We're not buying the sector as a whole. I'm just looking at some individual names that are showing strength at the moment, and that's what I want to continue to buy at the moment, which is mainly in the refining space.
Totally, Jason. I have some charts. We can talk about energy later in the show, but we were on a call about an hour ago, and you mentioned that shipping rates were ripping and how that correlates to potentially higher energy prices. That's something we saw in the previous cycle. So I went and pulled up my chart of the dry bulk shipping ETF, and sure enough, I mean, this looks absolutely ready to explode higher. I mean, this is such a beautiful base, and this ETF, BDRY, can really move too, Jason. Like, I think this could easily get back towards $17, and that's like a double from here. So, tell us about your outlook for shipping rates and what that means for the energy trade, because I don't think that's a thing that many people are following right now.
No, and it's hard to understand because there's so many different indexes, so many different ETFs, and if you really don't understand the space well, it's hard to figure it out. So if you're looking at this is dry bulk shipping. This isn't things like oil is not in here.
This is more like grains, right?
Grains, yep, you're looking at a lot of grains in this. Even some metals do get shipped on this. But this is one where I do think this is going to take off. I am long it myself personally. Got long above that $7 level. Continuing to hold. I think right now is another great time to get another trade in that one. That one looks great. So I definitely like dry bulk shipping, but also be wet. So I
What
highlighted
a great
this.
ticker. Be
Yeah.
well.
Be wet. Like give that to your girlfriend when you guys get home today. But anyways, but be wet. That's definitely an awesome ticker for everybody to pay attention to. If you look at that thing, it is ripping. There is a huge move happening at the moment. If you go to my page, I think I just posted that maybe 4 or 5 posts ago. And you guys can take a look at that one. But that thing's
Yeah,
just
up
taken.
another 5.5% today, Jason, challenging those 2023 highs.
And a lot of
Almost a
people
new all-time high for BWET.
And a lot of people keep highlighting the fact that, oh, well, this is bad and negative. These shipping stocks, like I started to buy some shipping stocks, talk about shipping stocks and so on. And people going, oh, man, this doesn't look really good for oil, like shipping, meaning more people, they have to run more ships to hold more cargo, meaning more oil out there on the water. And if you look at the oil on the water idea, there's a lot of oil out there at the moment and people are going, okay, well, that has to be the end. That means oil is going to crash. And really, most of the time when you see that happening, one, there's a big reason in Russia. That's a huge geopolitical reason that I could get into at some point, but not today on the show. Save that for members if we want to, Sam, maybe next week on next week's video. But if we're looking at all these ships holding all this oil at the moment, you got to look at when that's happened historically. And 2020 would be the latest one, which marked a 2020 bottom, which was the bottom for a very long time in energy. So I do
Crude
think
oil prices went negative, Jason.
yes, crude oil prices went negative because they ran out of places to put it at a certain point. They didn't know where they would store all this oil if people took delivery. And now it's kind of a similar scenario without the economy being in any type of bad state, with people going, oh my gosh, energy's dead. And it's once again, it's the same type of scenario. All you need is like really, if we had one more big flush in oil, who would be left to buy this thing? Like everybody hates it. It's a miserable trade. Everybody's had a miserable time trying to trade it. And this thing would take off because there's literally no sellers left. There can't be. And it's the same scenario we had in 2020, which who's really left to sell these things. And so, you have these scenarios that come up and we're seeing it at the moment. Yes, people tell me, well, OPEC production. Well, OPEC can't mandate more production. Like they still have a choice. Are these countries going to still produce this much oil? Can these companies produce this much oil? So there's still choices out there, and they're not producing as much as they talk about. Same when Donald Trump gets on and he says, "Drill, baby, drill," and everybody goes, "Okay, that's going to be very bearish for oil prices." And it's like, well, it doesn't mean that everybody just went out there and started drill, baby, drilling. It just means that he's saying it out loud, which is making the price go down. And that's what he wants as a president. And what we as the people want is lower gas prices. But we as traders understand that there's something underneath the surface here. But for me, oil, I really want to wait for it to get above that $80 level. I've talked about that a million times. I'm not going to just start buying oil heavily right now. Heating oil is another thing. Heating oil is looking a lot better. That might be where you want to start if you're in the future space in heating oil, because there is no ETS for heating oil in the United States. And then these strong refining names at the moment, or these shipping stock names. Like that for now is where I want to be in the energy sector at the moment.
Totally. We have a chart just for that, Jason. It's an equally weighted basket of the marine shippers. A lot of them are out here in Greece. I'm doing some boots on the ground research for these marine shippers, and man, they are doing incredibly well, absolutely ripping over the past month to a new 52-week high. And structurally, Jason, this looks like I've mentioned before with some of these previous charts, like the beginning of a brand new primary uptrend. And I think, a lot of the energy stocks will start to look like this. This is Imperial Oil, one of the leaders in energy. It's like a $60 billion integrated oil and gas stock from Canada. Look at a chart of this in absolute terms. It's been absolutely ripping to new all-time highs, and relative to the S&P 500, it looks poised to outperform for the foreseeable future. And I think this is just one example of energy stocks. Like if I could make a million charts that look like this, but man, big bases across energy.
That's a great find, Sam. You always find these really great gems for relative charts, and I think this thing's going to take off. I think, the energies thing is just a matter of time, and that's the thing. Like we can't force time. You can't be like, okay, well, this market's choppy. It should stop chopping around. I'm tired of being chopped around. And the market then goes, oh my gosh, I'm really sorry, everybody. We're going to stop chopping around. We're going to go into a very strong uptrend just because Jason really wants it to happen. That's not how the market works. The market is continue to wait for these signals, like we talked about. XLE above 101. That's the biggest level. 97 is another level. You could enter early if you want to, but 97 is one of them. And then $80 in oil. That's the next level. Heating oil is finally above those levels. So you could start to get long heating oil if you are a futures trader. The refiners, we've got some good trades in that at the moment. So, we continue to kind of go down the list and just take the trades as they come. The rest of the energy sector doesn't look as good as something like this. This is a really good looking chart.
Totally, Jason. And don't forget about the frackers. I mean, these frackers in true energy bull markets, they are some of the craziest ones out there, kind of like the oil and gas services stocks just in general. But like these are like, this is like OIH on steroids. So we have an equally weighted basket of some of the frackers. And look at how they're scooping and scoring back above a shelf of former lows. And man, this is um, a chart that you'll see frequently across energy, especially in relative terms. Like it looks almost identical to energy relative to the S&P 500 on an equally weighted basis. I didn't mark it up the same way, but if I were to mark it up the same way, you could draw that little scoop and score, potentially. And man, how I drew it up here, you can see that on a relative basis, energy is approaching the apex of a multi-year consolidation, and I think a big move is coming. And I don't think it's to the downside, Jason. I think this is coiled up and ready for a big upside resolution. What do you think?
Yeah,
Are you taking the other side? Do you think energy is going to continue to underperform?
Well, for me, Sam, I had this problem with like, so trading wise, I'm very objective and I just take the signals. But when like Sam says something like, do you want to take the other side of the trade or the other side of this bet? Sometimes I'm like, you know what? Maybe I just do because fuck it. like I don't know. But no, like for real, for me, I'm seeing all the same things. I think this is moving to the upside. I can't really see a reason to say, hey, in a year that we'll see energy prices lower. In 6 months, we'll see energy prices lower. I think it's going to happen. I mean, it's the same thing I've been saying all year long is like, it's probably going to happen towards year end. I've been talking about it. I think it's either happening right now and it's coming up very soon, or it's something that's going to happen in the next couple months. But I do think this trade is going to take off. I think the market is screaming it. I think it's under the surface is in everything we're looking at. We're seeing signs of it. And these are things that we haven't seen for a while. Like we haven't seen all this strength in the shippers. We haven't seen all this strength in the refiners. We haven't seen the strength in the frackers or the oil services companies. Like we haven't seen strength in any of these. They've looked like garbage for a long time. Now we're starting to see a little bit of outperformance. So at the moment, I'm getting very interested in the energy sector. I think it's more of a continue to set up your charts, continue to be ready to take those signals as they come, and just wait for them to confirm.
Totally, Jason. And here's something maybe we could disagree about is cocoa futures. I think this is a textbook top in cocoa futures, and they're about to get slammed from here. This is coming off of one of the most historic bull markets ever in any commodity. Doesn't matter whether it's soft, whether it's energy, whether it's metals, it doesn't matter. This is one of the biggest uptrends ever in a commodity, and now it's reversing and starting to break lower. So are you continuing to trend follow something like cocoa futures, or are you flipping the book short here at this like $6,000 range? Because I
Oh,
think
haven't been
it could
long.
easily get cut in half from here.
Haven't been long cocoa in a long time. And to your point, actually, the fund went short it the other day. So we're already short cocoa futures. We'll
Damn it! I
continue.
thought we could disagree on this one.
No, no, no. God, this is that's a, I mean, cocoa's trailing stop wouldn't be more than, 26%, I think is what we have. Man, this is way down there at the moment. I mean, that got chopped. So we got out of the position and then waited for a short signal, which is usually signified by a 100 or 52-week low, 100-day or 52-week low, which just came in not too long ago. So we've been short cocoa for a little bit. We'll continue to hang on to that position because I think you're right, Sam. I think this is head lower. And once again, it's soft commodities. When you're looking at soft commodities or commodities generally, besides gold, gold kind of has that monetary value. So you'll see it has a good premium that it holds over time. The rest of these commodities, they go up, they go down. You're going to make money on both sides of these trades. So definitely always be willing to short them just as much as you want to go long them. So when we're seeing a lot of these things breaking down, you'll see us highlight like we want to short these things here. We know these things are probably going to start to head lower. And when they break, they really, really break. Like this isn't a scenario where we're going to see, like Sam said, like it's not a scenario where we're going to see it hit like 5,000 and bounce. If this really breaks down, it's going to go down to 3,000 most likely. That'll
Totally.
happen
That's where
pretty
my
quick.
head's at. Yeah,
Yeah,
this thing could get crushed.
yeah.
There's not a lot of market memory at these levels. Like given the previous uptrend, it was just straight up for a very long time. So yeah, I think cocoa's vulnerable from the to further downside. And Jason, we have a question in the chat here from Jerry
Mhm.
asking about ZC, which is the corn. Corn's breaking out to its highest level since June today, and we've talked about this on previous episodes and how the grains are starting to bottom while livestock is topping out. Is that still what you're seeing? Are you still constructive on the grains? Have you taken any more buy signals in any of these products?
Well, corn's going to come in. Just need confirmation today. So if we get confirmation today, that'll be a long signal there too. So that'll be coming in pretty soon. But the grains generally, like I'm very bullish on it. The setup has been insane for years fundamentally. Like this is the reason why fundamentals suck because you can't just look at fundamentals alone and say I'm going to enter this thing. You've got to wait for the price to confirm it. because the fundamentals tell you the story, but we don't get paid on fundamentals. You don't get paid for being very right. Like, oh yeah, I knew this would. That doesn't mean anything in trading. It matters that the price goes up. So now that we're seeing the price signals start to come in, like we highlighted, almost a month ago now, soybeans hit a 52-week high, started to break out of that coil pattern. That was one that was awesome. And now we're getting corn confirming that. Then we'll probably see wheat. So I definitely think the grains are looking good. Softs, however, they made their runs. Coffee's still looking really good, but cocoa made its run when none of the other commodities were moving in 22, 23, 24. Like nobody cared
Totally.
about
Orange
anything.
juice is in the same boat too,
Yeah.
Jason. They're kicking the shit out of orange juice.
Yep. Because they made their runs. They got way overvalued, and that's what you see a lot of the times it happens. And this is what creates these commodity cycles. Is you have these, let's say it's 2022, and nobody on Earth really cares to produce cocoa at that moment. Like it's cheap. You're not going to make much money doing it, and then you see this top, and let's say it goes up, 5x. So you get this 5x move in a huge commodity like cocoa, then everybody's trying to find it. Everybody wants it. So then there becomes an oversupply at that point. That oversupply leads to that thing topping out, rolling over. And then next thing you know, it bottoms out once again years later. And then nobody's looking for it once again. Nobody cares about it. And then it goes back up. We've kind of seen the same in the United States with corn. People have rotated into different crops. Same as soybeans. People start to rotate into different crops in different areas. And then next thing you know, you have this undersupply once again. And not to mention, we had weather issues. We had a lot of issues with weather over the last couple of years. So we're not producing as much. So I think we have a catalyst here for a big move in the grain markets. And so that's where I want to be. That's where I want to continue to look. Coffee, still long, still very long coffee at the moment. But the rest of the softs, I'm out.
Totally. That's a really interesting question here from Frey Lee, asking if cocoa is the top, what usually follows cocoa down? And I think you just hit the nail on the head there. Like it's kind of a bifurcated group. You still have coffee looking really constructive here, but cocoa definitely doesn't look good. Orange juice doesn't look good. Sugar doesn't look good. There's like a lot of bearish charts inside of the soft commodities. And
Cotton
like
doesn't look good
cotton
either.
doesn't look good. We make every week we include an equally weighted basket of the soft commodities, all of those that I just listed off, and we put it in an equally weighted index, and you can see that it's running into a shelf of former highs from, I believe, the great financial crisis. So it's a big level for the soft commodities. It would be really logical for them to struggle here for some time. But over longer time frames, I think they eventually break out, and there will be another epic bull market for things like cocoa.
Oh yeah.
But today I think the path of least resistance is lower.
Yes, I think that's right. And something that might move after with cocoa, sugar tends to at times. But like once again, it's like take them all for what they are. Like everybody wants to know what's next, and that's a perfect way of looking at things. And really as a trader, it's more like, yeah, maybe sugar could be next. Look at whatever's topping. Go make a list of them. Go, okay, this could be next, this could be next, this could be next, but don't do anything with it until you get the price confirmation signal. And like we're seeing here in cocoa, that's a confirmed breakdown. That's about as confirmed of a breakdown as you're ever going to see. So
Totally.
that's something you want to short, as opposed to just trying to short something because you think it's going to move with cocoa, for example.
We have Wavy saying long commodities, short crypto. Um,
I'm getting
there's a
close to
time and
shorting
place for
crypto.
everything, Jason.
I'm getting close to getting a signal to go short on Bitcoin. We still have a long, I'm not that short term where I'm going to be in and out of positions that much, but we still have a long, and anybody who knows me has always freaks out by this one point of how my crypto system works. 30% trailing stop. People like their minds blow up. They're like, "Oh my god, 30% trailing stop." And really like if you look at it, it is the most volatile asset in history. Like granted there's smaller coins and smaller stocks and whatnot, but if we're talking about like big assets, it's the most volatile stock in history. You have to have a very wide stop to catch those major uptrends. So if we're, let's say we're buying this thing at 20K like we did, and we're hanging on to it until it hits 120, and then it comes back and gets stopped out around this zone, I'm still pretty happy. There's nothing really wrong with that. So, but that's the only way you're really going to catch those major trends in things like commodities or crypto. But if this thing breaks, a certain level, like I'm going to flip the book short on it and trade it all the way back down to maybe 20, which would be fantastic for a short. But I don't know. There's nothing confirming that crypto is going to move that low just yet. But when we start to see that more of a breakdown, I'll definitely be shorting it.
Totally. All right, Jason, final trade here. I think the natural resources, just in general, are the trade. Look at the VanEck Natural Resources ETF breaking out to new all-time highs about as decisively as you could possibly imagine. This is a chart we covered in Commodities Weekly about a month ago, digging in not only to this ETF, but some of the strongest components inside of it. You have a really nice diversified basket of natural resources stocks, things like ExxonMobil. You have Deere for the agriculture, and you have NextEra Energy. I really like this ETF just in general. It looks a lot like there's a inflation hedged basket, which kind of, it's geared towards natural resources, things that can hedge inflation, and it looks very similar to this. But I think just the overall theme right now in the market is buy things that are hedges against inflation. You have the Federal Reserve cutting interest rates with risk assets at all-time highs. This is not the time to be injecting liquidity into the system, and the market is sniffing that out, and the potential inflation that could cause. So I really like natural resources just in general.
Yeah, I think this is a great area to be in and a great ETF for everybody to take a look at. Because it's just like Sam said, it's a commodity bull market. Like yes, people are going to go, well, inflation hasn't taken off yet. Yes, that's all based on the oil price. When oil starts to take off, it'll change. But if we look at the whole market and we see, we're talking about gold miners, we're talking about silver miners, copper miners. I've listed it like 30 times.
The market is a forward-looking discounting mechanism, Jason.
Exactly.
Whether we see inflation today or not is not the point. The market is
Exactly.
pricing in future inflation, and that's
Yes.
exactly what you're seeing in the chart of HAP.
And this looks great. This looks like a hell of a setup. And like, there's some uranium names in there. There's some nuclear names in there. Like, I really love this setup here. So I would continue to like look for things like this. Look for strength. Like overall, it doesn't even matter like whether you're a commodities trader, you're gold guy, whatever you are, like look for strength in the market. Like look for strength in, and we're talking about international. Find the strongest international names. Find the strongest natural resource stocks, find the strongest commodities. Like if you continue to do that, you're going to make a lot more money than everybody else in the market. And that's all really at the end of the day, that's all I do. That's all the fund does is just find strength and continue to ride strength and exit when it's weak.
You keep it simple,
Yeah.
that's how you make the most amount of money. You don't need to anticipate anything, you just take the signals as they come.
Yes.
So that's exactly what we do at Gold Rush. We cover areas of the market that are moving and where there are opportunities to make money, whether it's in commodities, currencies, bonds. We do it all. We write about precious metals every Monday. Jason writes about bonds every Thursday. Rick writes currency reports that are absolutely killer. I think another one of those is going to drop either today or tomorrow. But yeah, Rick is absolutely crushing it with the currencies. So we cover it all at All Star Charts Gold Rush, and you can join us for $12.99 a year. And you get a 30-day money back guarantee. And if you are interested in checking out more of what we do, you can click the link in the description. And before you leave us, we would greatly appreciate it if you could like this video so we can get our message out there to more people. But we really appreciate all of you being here. Frey Lee, Jerry, we have Risky Business in the chat as well. Thank you all for being here, and we hope you guys will show up again next Thursday for another episode of Gold Rush with Jason and I. Maybe there will be a special guest. I don't know. We'll talk about it, Jason.
Working on it. Working on it. We'll see.
Cool.
Either way, guys, we're planning on bringing you a guest every few weeks. So we will get a guest on here soon. I think it'll be a grain and commodity guy like you guys wanted. So hopefully that'll happen soon.
That would be awesome. All right, everybody. We will catch you on the flip side. Go out there and try to make some money.